Hello, everyone. Thank you for tuning in. Very interesting day in the markets. First of all, that GDP number was really bad. I mean, it hints of stagflation. What is stagflation? Well, stagflation is when you have inflation, but you have the GDP shrinking. The economy is doing bad. Inflation, in and of itself, is not a bad thing. It's natural. In a growing economy, there's going to be inflation. That's why when the government talks about we're going to target 2%, well, that's because over the years, the economy grows. I mean, this is the reason why the house your grandmother bought for $50,000 is now worth $300,000. So inflation is okay. What's bad is when inflation is higher than estimated. And inflation naturally comes with a booming economy. Okay. If the economy is going down, it would follow that inflation would be going down. But it's not. So this GDP number that came out this morning was below estimates, a lot below estimates, like 30% below estimates. But within the data, there is there are inflation readings that were above estimates. So today's reading shows us increasing inflation, but a slowing economy. And that is the definition of stagflation. So that was a pretty weak number. So let's take a look at Microsoft because I know they just reported. It's probably flying at this point, but these days you got to kind of wait because things could look very different tomorrow. Real interesting here, right? Look at Microsoft. This shows you how levels that were support can be support again, right? Got up here, sold off, 400 was support, 400 was support, then we rallied. Now we're back up to 416. So we're back up above here. Now, let me ask you a question. How is it possible that the price level that was support can become support again? In markets, you have to understand certain price levels are more important than others. That's just how it is. Sometimes we know why and sometimes we don't, but we don't need to know. We just need to know where they are. So Microsoft gets to 400, people sell. The next day it blasts off. A lot of these people that sold are like, oh, what the hell did I do here? I made a mistake. If this stock ever gets back to my price, I'm going to buy my shares back. So if you have enough remorseful sellers placing buy orders, the level that was support can become support again. And that's what happened here. Now, why do we rally off of support? Support is a level where there's a large group of buyers. There's a large buy interest. Sometimes some of these buyers sense that, oh, there's another buyer coming into the market here. In the institutional world, say you have a big order, okay? Like I used to do, you got to buy 1,000,000 shares of this thing. And the last trade was at 400. And it's like, wow, I got to really get some stock in here, okay? If someone comes in and tries to sell it all to me at 400, I'm going to buy it. And then all of a sudden you see a bid pop up. Someone is willing to pay 450 cents. And then it's like, oh man, I really need to buy some stock because I don't want to miss it. But someone else is willing to pay 50 cents. I'm going to have to pop my bid up to 60 cents. Someone else sees me do that. They do the same. It starts the snowball effect. So a lot of times when markets get to support, they tend to rally. And that stock market jobber, this is one of the things that one of my favorite ways to look for trading ideas is stocks that are oversold that are out of support. Oversold is a term for something that's been really beaten down. The vast majority of the time, something trades within its average or typical trading range. That's why it's called average. If it gets below that or above that, a lot of traders come into it because they're expecting a reversion to the mean. A lot of trading models and strategies on the street are based on this concept of reversion to the mean. Now, talking about levels. So Microsoft has blasted off. I want to get to, well, if I owned it, I'd be pretty happy. I'm just saying the picture could look very different tomorrow morning. But anyway, why did Microsoft blast off and happen to just find support resistance right around here? It was a support level. All right. Now, this is buyer's remorse. There are people that bought here who are upset because assuming they still hold it because they're underwater. Now this thing blasts off and it's like you get all these remorseful buyers that are like, wow, here's my chance to get out at break even. So I'm going to take it. So if there's enough remorseful buyers placing sell orders at the level that was support, it converts into resistance. And that's why the big move higher stalled out right there. It's not a coincidence. It's not at 414 or 420. It's trading right where there was support, right? Opening price here, closing price here. Remember, you should, if you're a trader, you should say this to, this should be like your mantra. You know, you get up every morning. Just tell yourself, some price levels are more important than others. Oh, I don't know. Oh, mame, oh, made padame. I don't know. I used to know some, whatever, but just say some price levels are more important than others. All right, now let's go take a look at NVIDIA. Here we go again. Remember, some price levels are more important than others, blah, blah, blah. Look at this. Notice how there was resistance here. Market gets to a peak, finds resistance where? The level that was a former peak. There are people who bought way up, who bought here, the thing collapses, and they're like, you know, if I can get out of break even, I'm going to. So it finally gets back to their price, and you get remorseful buyers from here selling here. That's why you get resistance at former peaks. Buyer's remorse also converts support into resistance. You get people that bought here. It's like, the market's lower. If it gets back to my price, I'm going to sell to get out. If you have enough people who bought here, placing sell orders here, the level turns into support. I mean, sorry, resistance. Support turns into resistance. All right, now let's look at Apple, and those are the big three in the technology sector. Listen, if you guys have any questions, you know, fire them out. Send them over. I like responding. We're trying to build a community here. It's going pretty good so far, but, you know, it could always be better. Got some students that are doing very well. It's not a trading mill. It's not a trade idea of the day type thing. It's like, you know, you don't hire a golf instructor to play for you. You hire him to teach you how to play golf. You don't hire a sensei to teach you, or you don't hire a sensei to beat people up. You teach him, or you hire him to teach you how to defend yourself. Well, I teach people how to trade. And, you know, I mean, a lot of people have been pretty happy. So we'll keep it going. Anyway, blah, blah, blah. Enough about me. All right, we'll have to see what happens here with Apple. This is probably up a little bit because of the Microsoft news. But we shall see. Like I said, it's really kind of hard to get a insight on it right now tonight. Got to kind of give it some time to settle down because the picture might look very different tomorrow. These days, things could blast off one way. You go to bed, wake up, next day is down, you know, the same amount the other way. All right, just want to take a quick look at the bond market here. You know, bonds are down big. This is negative for equities because when bonds go down, interest rates go up. Higher interest rates mean companies have to spend more money to operate. So it takes profit out of their bottom line. It also means funds use less leverage. So that's bearish. It also means there's competition for stocks. If interest rates get high enough, people sell stocks. So this is a bearish thing here. And this is a reliable pattern. You know, it's not perfect, but they tend to be pretty reliable. This is the old descending triangle. Now, what does this show? If you look at a chart the right way, it should show you, it should illustrate supply and demand in psychology. Okay. What does this show us? Is this just some freaking, you know, astrology chart? I'm sorry, I get mad because there's so much bad, quote unquote, analysis out there. What does this show us? This chart shows you that there are aggressive buyers, or sorry, aggressive sellers and complacent buyers. How do we see that? Look at this support level. From February through April, the buyers were kind of cool with hanging out. All right, yeah, we're chill, you know, whatever. If the sellers come to us, we'll buy. If not, we miss it, no problem. But as the time is going by, the sellers are becoming more aggressive. That's why these peaks are forming at lower levels. All right, so think about it. Complacent, patient buyers, aggressive sellers. That's a recipe for the market to move lower. And that's what happened there. You can see the opposite in oil. This is the ascending triangle, which played out. And, you know, this is the type of stuff we follow. So hopefully you guys will, or you people will join up here or whatever. But, so this is the opposite. The resistance level is the same, but the bottoms are getting higher. When a bottom forms at a higher level than the prior peak, we call it a lower high. This shows that it's the opposite of the descending triangle. As time is going by here, buyers are stepping up and paying higher prices, but the sellers are just kind of okay with hanging out. So this chart shows aggressive buyers can place in sellers. It sets the stage for a move higher. Sure enough, that's what happened. All right, everyone. Thanks for checking in. I personally have no idea what the hell is going to go on with Microsoft. You know, it could be a very different picture tomorrow morning. So hopefully you'll check back, and I will talk to you then. Thanks, everyone.